Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar picked up a mid-tone on Wednesday following a rebound from the weekly low and also the key support level of 66.60. With a light economic calendar and likely to see much fine to thin, that is, volume, the market is expected to slip into a consolidation pattern ahead of Christmas. Still, from the rebound of 66.60 has put the focus on the top side around 67.40-45, and with the positive RSI coming back into play, does put the bulls in a prime position to take the challenge, and if breached, could put further indication to that re-challenge of 68.45-55. In light of the bearish outside range day that we see, or the engulfing candle, failed to get confirmation to its negative candlestick, and the fact is that we didn't get the break or close under, that is, of New York of 66.60, has put the bulls, as I mentioned, in a favorable position. So keep an eye and see if 45 can actually go to that top side to ignite the rally. The market for the euro wavers in and out of losses and gains on Wednesday. However, it remained in the green as it coasts along above the level of 105.70. As I've mentioned before, there is an engulfing candle that does await confirmation to the negative case, and that is a break of 105.70, which would expose the region of 104.40 as a potential target. But the technicals have picked up. Along with that, the dollar index, which measures the greenback strength against a basket of 6 major currencies, hovers over the near 6-month lows around 103.55 to 70. The dollar would need to break 103.25 to give further push to the euro, and if so, that would put 102 for the dollar index and put the market in a prime position to take the challenge to 107.20, which at present does look like it's slowly emerging, and that is, if the bulls can take the opportunity, then we could see this rally ignite. Since the 4% fall after the surprise move by the Bank of Japan to change its policy settings, it did catch the market off guard, and it still remains heavily bruised. In light of the pattern, there is still a little bit of supply coming into the market, because no doubt a bull trap was set around that near 138 level, and from the significant downturn, we're getting a slight flag here. A break of 131.5 would expose the next level, which is a key level, that is at 130.5, and a break there will give further indication, and maybe another stab to the lower side of the range that comes in around 126 to 127. However, as I mentioned, 130.5 is a key level, and if we see a rejection from there with some divergence seen, which does put in favor of a possible correction, that is for a move back to the region of 133.20-30 and reassess. Sterling was weaker overnight and still holding above that key level of 120.25. A little bit of a mid-tone coming back into play here in the Asia session. Therefore, keep an eye on that top side, and the clearance of 121.25 would see further indication to a region of 121.60, with the top side actually still in favour of 122 to 124, while we remain above that key level of 120.25. After an explosion to the upside, gold appears to have settled down as it looks or hovers beneath that key level of 1,826 to 30. What's in favour of a challenge to the upside is we've got an ADX that's supporting a modest trend to the bull case, RSI holding, but the MACD is still a little bit to the negative side. So we may see a challenge there, but failing towards 1,830, and maybe see a pullback to the region of 1,796 and reassess. Wrapping up with oil, the market still holds to a bull tone, as we can now see the further targets of $79 to $81 a barrel coming into play, and if so, may see a rejection from there like we saw recently. But nevertheless, the last 3 days of the bullish upward momentum does keep the bullish case for oil in play. So let's see how the bears tackle this topside level in defense, and if so, could see, as I say, that rejection. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.